Hi everyone, I'm Francisco. Welcome to Forex Academy. Today we will show you the theory and practice of the Donchian Breakout system, one of the systems with more longevity around, which still works beautifully in almost all time frames. Let's get it started. The Donchian channel breakout was created by Richard Donchian. He was the author of one of the first channel breakout systems. He devised it as an idea to catch the primary trend very soon. The original Donchian trading method was as follows. Go long and cover shorts when the current price goes higher than the highest high of the latest 4 weeks. Sell short and cover long positions when the current price falls below the lowest price of the latest 4 weeks. The Donchian 4-week rule complies with the basic rules of a trading system. Follow the trend, let profits run, and limit your losses. When we draw the lines connecting the 20 periods highs and lows, a channel is formed. As an example, the figure on this slide shows a 20-period Donchian breakout channel of the euro-US dollar in 1 hour chart. The horizontal lines corresponds with tops and bottoms of the previous 20 hours, forming the channel we are seeing. To guarantee a minimum of due diligence regarding our strategies, we tested the rules on intraday trading on a large database. The above figure shows an 8N-bar breakout system parameter optimization on 18 years of the euro-US dollar 1 hour chart. The graph shows a relatively smooth hill that graphs the return on account achieved by the strategy using a constant one lot size. This is great because it tells us that the parameter values at the center of the plane, which corresponds to the top of the hill, is relatively stable against any change in market conditions. Even more, the lowest areas of the parameter map deliver positive returns long term, which is great. The best behavior corresponds to a 9-hour breakout. This is an equity graph created using the 9-period breakout on the euro-US dollar chart without trails, stops, or targets. It shows a really healthy growth, although, as it happens in most trend-following strategies, there are some periods of drawdown. For example, the first 2 years are not that good, and the period starting on 2013 and up to the beginning of 2014 is a period of drawdown, and it's very long. Nobody said trading was an easy task. This table shows the total trade analysis. We observed interesting data. For example, 36.7% gainers and a win-loss ratio of 2, which corresponds to the risk-reward of the system. This is consistent with a trend-following system. The average trade is 25 euros. This is the expectancy of a system on a constant one-lot trade. We observed here the same good results. This is a US dollar-yen 1 hour chart. Although short-term we spot a large drawdown in 2008, long-term curve is very good. This is expected in every real system you may devise. The large drawdowns happens. There is no easy path to profitability, just money management. This is the total trade analysis table for the euro-dollar-yen. The percent gainers here is 38%, and the ratio reward to risk, which corresponds to the ratio average win to average loss, is 2.15%. Based on the evidence that without any parameter optimization, this system behaves equally well on the euro-dollar and dollar-yen, and also on the large dataset of auto-sample trading results, we can confidently conclude that the Donchian breakout system is a terrific system to trade, although not easy to handle, because having only 35 to 38% profitable trades, the Donchian breakout system may experience large drawdowns. And as we may see here, analyzing this system using Monte Carlo methods. This graph shows the shuffle analysis of the euro-dollar Donchian system. This shuffle analysis is a variation of the real Monte Carlo resampling. Here we only shuffle the same trades, therefore the initial and final points are the same. But this graph really allows us to observe the variability of results in terms of possible histories. The statistical properties of the system and also every one of the trades are the same, but luck and chance draw different paths from initial to final point. Therefore, some paths are luckier and experience just a very teeny drawdown, such as the one drawn in blue. Other histories present very unlucky paths with larger drawdowns, such as the one in brown, making it hard for the trader to continue following the system. This graph shows the net profit analysis on our euro-US dollar Donchian system. Net profit shows that profit goes from 160k to 1212k, starting from a 10k euro account. This means the average trade goes from 21 euro to 28 euro on each lot traded. A 10 contract position delivers a mean of 15,000 euro monthly. Obviously, you may need at least 50k account to trade the system using proper money management to reach that figure. But a bold trader using 2 contracts is able to produce about 3k monthly. This figure shows the max drawdown analysis on the euro-US dollar Donchian system. A drawdown analysis is key to understand the system and its risks and prepare proper position sizing strategy. This slide, and especially next one, will help us in this task. On this slide, we observe that there is 35% probability that we may experience a 20k drawdown, or about 10% of the equity won, but a teeny chance that the drawdown goes to 30k using one lot sizing. The real question here, of course, is what was the total equity when this max drawdown occurred. On this slide, we have very important information regarding risk that completes the picture started in the previous slide. We can see here that 50% of the trading paths reaches the 18 consecutive losing trades, while 25% of them suffer up to 20 losing streak. And 10% of them went up to 25 consecutive losers. Trading is like a Russian roulette, but using a revolver with 100 bullet holes. Therefore, if we shoot just one path, we have 10% chance of getting 25 losing trades in a row. But as time goes on and we shoot several times, the probability of getting 25 consecutive bad trades in a row grows exponentially. Therefore, we need to be prepared. First, we need to trust the system. There is no problem with the system. The problem is statistical, and it can only be solved using proper position size. Since we need to be prepared to experience a 25 losing streak, we need to define our max allowable drawdown. That will be a compromise between our risk tolerance and our profit goals. This is a simple example for you to familiarize with the link between position size drawdown and losing streak protection. The concept is rather simple. We want to be protected against a 33% drawdown, and we expect that sometimes we will experience 25 consecutive losers. This is of course an approximation, but a good one. We just divide the 33% drawdown by the expected number of consecutive losers, so we may experience a teeny chance of reaching that 33% drawdown. Of course, you may use the drawdown figure that you are comfortable with, for example 20% or whatever. In this case, we conclude that we cannot trade using more than 1.32% risk of your trading balance. This is not meant to teach you math, therefore let's keep math to a minimum needed to understand the concept of diversification. To understand the power of diversification, let's assume we are able to find a basket of totally uncorrelated assets. In that case, the total risk of the basket is computed by the formula above. Total risk squared is the sum of the weights on each asset multiplied by its risk squared. For the special case where weights and risk are identical, total risk squared is the number of assets multiplied by risk squared. For a basket of 5 assets, this means total risk is the square root of 5 multiplied by individual risk, or total risk is 2.33% multiplied by individual risk. Therefore, a basket of 5 assets combined have less than 50% the risk of a single asset on a basket with 5 individual risks. This is a small guide to help you install the Donchian system on your MT4. Okay, we are in this page, which is mql5.com, and we will click here Donchian. So we are in this list, and we go to the Donchian price channels here. Okay, this is the indicator, and we know it's free, so we download it. We click, and we are presented with this window where you state if you have or not MetaTrader. Okay, you have it, you should have it, so you click here, and it's asking you to allow to install this indicator on your MetaTrader, so you allow. Now we have our Donchian indicator installed in our MT4, and we want to use it in this chart. This is a 1 hour Bitcoin chart, so we have to insert it. Insert indicators, custom, and Donchian price channel. And now let's say we use the 9 period Donchian. So let's say OK, and then we have it. So once we have it, we are able to trade manually our Donchian system. That's rather easy. We will trade short when the line is broken to the downside. For example, here the down is going up and then it curves down. So here the 9 period low is broken, and we enter a short here, and the short is going down, rather down, and there's nothing up to down. And here in this place where the line, the upper line of the channel is broken, we close our short position and open a new one, and open a long one. And here we have to close it again for a small loss and open a short one, and we can close it for a small loss and open one that goes up, and we close it here for a small gain, and goes down and down and up, and we close it here for a scratch. Almost no gain, no loss, and we are enter a long position here that goes up until here goes down and crosses here. This is our close for a nice profit on the long side, and we sell short, but we again lose here for a small loss, and go up and go long until here for a gain, not that good, but a nice one, and go short and for a small loss here, and go long for a small loss here, and go short for a small loss here, and go long for a good one here, which closes this, and go short, and nobody knows what happens there. So this is the way to trade this Donchian system manually. I hope you profit from it. That's it for now. Bye.